The U.S. Senate today voted in favor of blocking Donald Trump from taking further military action in Venezuela, which may discourage the U.S. from resuming military pressure if it interferes with efforts to control the country's oil sector. For more on this, let's bring in Stewart Glickman, energy equity analyst and deputy research director at CFRA Research. It's good to have you join us. Thanks so much.
Hi, Lindsay. Thanks for having me.
So how might this decision by the Supreme Court today affect what the U.S. administration and the U.S. oil companies have been kind of starting to do in Venezuela since the weekend?
Yeah, so I think any effort to try to rejuvenate Venezuela's oil productive capacity, which has really fallen off on hard times. Just to put it in context, Venezuela used to produce around 3.5 million barrels a day back in the late 90s. And then, most recently they were producing a little less than 30% of that, 860,000 barrels a day in November. So there's a long way to go for them to get back to, their heydays. And you have two sets of problems that you would have to resolve to get back in country and really resuscitate that industry. Number one are what we call above ground problems. So having a stable political environment, having a secure security for the petroleum engineers and personnel that are needed to come into country and do the work. You'd have to have the electric grid fixed. Venezuela is notorious for blackouts and brownouts. So all of those things don't contribute to that kind of healthy backdrop you would want to get into the country and start fixing things. And then the second set of problems are the ones that we call below ground problems, where you're really working on fixing the leaky pipelines, improving the oil terminals, bringing more high-end technology to bear to get that oil out of the ground. But you have to have improvements on both above and below ground, and we're nowhere close to that yet.
And there's so much money that would need to go into this to fix all these issues, to get Venezuela's oil production up to speed from where it was in the 90s, as you were talking about. Like, do you think that there's interest with that in mind, how much money would be needed to update all the infrastructure? Is there interest from investors really to do this?
So the price tag for this is probably in the tens of billions of dollars. That's one thing. And then the second thing is the time. And to get back to square one, to that, let's call it 3 million barrels a day range, you're probably talking about at least a decade, probably more to get there. So on the one hand, there's a lot of oil in place. Venezuela arguably, at least by their estimates, I'm not sure they've been audited, but at least by their estimates, they have 303 billion barrels of oil in place. That's more than Saudi Arabia, available for, trying to bring to the surface. But at the same time, you have U.S. investors that have interests in, Chevron, Exxon, Conoco, and so on, who are, really desirous of maintaining dividends and buybacks and really not taking on a whole lot of major project risk. So I think it's going to be a hard sell to the management teams and the boards of these companies to really go in a really big way into Venezuela without a lot of the assurances that I talked about first being put in place.
We've also been seeing the news that some American companies are saying that Venezuela owes them billions of dollars over the last couple of decades. Do you think there will be an actual legal assessment into these claims?
It's a good question. There are some companies that have been burned by this in the past, Conoco being one, Exxon being another, where they've had their assets expropriated before, and so there is unresolved legal claims, debt that's owed that Venezuela has not paid. I think any agreement that would bring those companies, or even Chevron, which still has a relationship, but having them move in a bigger way, I think you would want those kinds of legal guarantees, some kind of treaty, more than just a memorandum of understanding, because those can change with administrations, but some kind of bilateral treaty or something that gives some real heft to an agreement, and it gives you the legal backing you would want if you're management of one of these big companies.
Okay, just so much to go over here. That's all the time we have, though. That was Stewart Glickman, Energy Equity Analyst and Deputy Research Director at CFRA Research. Appreciate the time. Thanks so much.